Hey there, it's Mike Thomas here. Today we're going to be taking a look at a video called Passive Income, How to Make $100 per Day with Dividends. And this is one of my favorite topics, using the stock market, using your money that you already have in order to have that money work for you as little money soldiers. It's one of my favorite things in the world. $100 per day is quite a bit of money. I mean, that's $3,000 per month if you've got this working for you. But let's go ahead and take a look at this. First thing I'm going to do is I'm going to go ahead and like this video. If you guys can like my video as well, it really helps with my YouTube channel and I appreciate it. And if you're not subscribed already, hit that subscribe button and bell notification. Let's jump into it.
What's up, you guys? It's Graham here. So instead of the usual doom and gloom, let's talk about this. How to make $100 a day with dividends starting from $0, the easy way, coming from someone who's done exactly that.
Here's the thing with Graham, he makes a lot of money. He makes millions and millions of dollars online. This is a little bit of a hypey video for him, but I know that because of his reputation that he's got some real, there's going to be some proof behind this and there's going to be some real info here. So let's keep watching.
In fact, my dividend portfolio currently makes just over $90,000 a year, and the strategies for getting there were rather simple.
$90,000 a year in just dividends. That's great. But of course, his portfolio is going to go up and down.
After all, with the stock market having already declined more than 20%, the economy in shambles, and inflation out of control, dividends can help offset the loss of the stock's value. They increase the more the market goes down, and anyone can get started making extra money immediately with as little as $1.
And the nice thing about dividends is if you reinvest them back into your stock, then you can just keep on, even if you're losing money in your stock, you're at least getting more shares as the prices go down.
So let's discuss exactly what you could do, the good, the bad, the ugly of dividends, which strategy has the potential to make the most amount of money, and then finally the step-by-step blueprint that you could use to go from $0 to $100 a day, all for the cost of subscribing if you haven't done that already.
He's really good at getting people to hit a subscribe button.
And as a thank you for doing that, here's a picture of a kitten. Alright, so in terms of where to start, we have to talk about the basics of dividends. See, anytime you buy a stock, that entitles you to a portion of that company's profits, and every now and then those profits are distributed to you on a regular basis.
Pretty much recurring income from the stock. It's amazing.
It's in the form of a dividend. So if one share is paying out $5 a year and it's currently trading for $100, that means you'll be getting a 5% return, and because of that, the dividend yield could move higher or
That's a pretty high dividend yield, though, 5%.
Lower depending on what price the stock is selling for. Of course, not every stock pays a dividend, but when they do, they usually range anywhere from less than 1% to sometimes more than 10% depending on the company. Although you'll tend to find the strongest stocks paying anywhere from 1 to 5% every single year, which is probably going to be the easiest passive income you will ever make in your entire life.
I like to have some money in stocks. I have some money in like high yield savings, some money in real estate. I want to make sure that I've got my eggs in multiple baskets so that if something goes down, that I'm not screwed.
For example, with a company like Chevron, you'll get 3.6% just for holding on to the stock, which means for every $1,000 you invest, you'll get a free $36 deposited back into your account on a regular basis, on top of the stock price also moving up in price, hopefully. The benefit from an investment standpoint is that you'll be able to receive predictable cash flow on a regular basis without having to sell any shares, and this gives you leftover money that you could then use to reinvest into buying even more investments. Or I guess you could go and buy a jet ski if that's your thing.
If you don't reinvest it though, I mean, you're going to be missing out on a lot of gains. So my non-advice to you is I'm not allowed to give you financial advice, but my thing that I do myself is I reinvest it.
Whatever floats your boat. However, when it comes to doing this, just like with anything, there are some pros and cons that need to be considered. So if you eventually want to scale this up to $100 a day, here's what you're up against. But first, let's start with the good. Number one, you're insulated from the stock market. For the most part, you'll get the exact same dividend payment in the exact same amount, regardless if the stock trades for $20 or $40. And for someone who's expecting consistent cash flow, this helps smooth out the fluctuations in the market. Second, dividend payments are a lot less volatile than stock prices. For example, the Simply Safe Dividends blog found that from 1900 through 2018, dividend payments remained fairly constant with an average variance of plus or minus 10% during market downturns. When you compare that to the S&P 500, you'll quickly see that there's a lot more volatility, and for someone who wants consistent cash flow, it's a lot less to stomach.
But your stock is it can go way down. I mean, you can lose millions of dollars, and then but you'll be getting paid a dividend, but you're still like way down.
Third, throughout recessions, dividend payments sometimes even increase. As Simply Safe Dividends points out, in 3 of the above recessions, dividends paid to investors actually increased, including a 46% jump during the first recession following World War II. Now, even though such an increase doesn't happen every time, the average dividend cut is just a mere 0.5% compared to the stock market's average decline of 32%. Fourth, dividend stocks have been shown to have a comparable return to the overall market. In fact, Fidelity found that dividends accounted for 54% of market returns during times when inflation was above 5%. That means that even though they might not be the stocks that go up the most during a bull market, they also don't fall the most during a crash. And fifth, depending on your tax bracket, dividends could actually be taxed at a lower rate. I'll cover this one in more detail towards the end of the video, but if you receive a qualified dividend, you could pay no tax whatsoever if you're single making under $41,000.
Single making under 41,000. That's a lot of people making under 41,000. I'm sure that there are people watching this video that are making under that
a year, or married making less than $83,000 a year. However, even though all of that sounds fantastic, we can't have a balanced discussion about dividends without also talking about the downsides. First, dividends are not guaranteed. Even though companies generally try to avoid cutting or reducing dividends, it does happen. And because dividends are a reflection of a company's profits, in the event of a downturn, they may choose to turn off the money faucet until conditions improve. Second, dividend payments mean nothing when the company itself declines in value.
Exactly. If that stock goes down, then woohoo, I made some dividend payments, but I'm still way down.
In this case, earning a 5% yield might actually lose you money when the stock declines 30% in value, and there are plenty of examples of exactly this. Now sure, there's a chance the price recovers while you sit back and collect all that cash flow, but there's also a chance it doesn't, and that needs to be considered. Third, even though there can be some tax advantages, there could also be some tax disadvantages. See, unlike buying a stock and only paying tax when you sell, dividends are taxed the moment you receive them, and depending on your tax bracket, that could be as high as 20% or more. And fourth, dividends may flat out just be irrelevant. Two very well-known economists argue that dividend payments don't matter at all because it has zero effect on the company or their cost of capital. In this case, they explain that if an investor actually needs the money, all they have to do is sell the stock, and that dividends don't actually create any more value for the company itself. It's kind of like saying, instead of paying a 2% dividend, the stock price will just go up by an extra 2%, where both scenarios leave you with the exact same amount of value. Although all in all, I'll admit, as someone who invests in both growth stocks and receives dividends from a variety of holdings, I do think that there are some major advantages for anyone who wants to do this to make passive income. And in terms of the step-by-step...
But here's the thing though, most people don't have the amount of money that he has to invest. Still though, I mean, you could put some money in the market and make a little bit of passive income, but to make $100, you'd need quite a bit of money, like $100 a day. You need a lot of money in the market.
Step blueprint that you could use to go from $0 to $100 a day. Here's what you need to know. Alright, so in terms of building up a dividend portfolio, contrary to what most people think, there are some companies out there who have never missed a dividend payment ever. And before going into the step-by-step blueprint of how you would be able to build up passive income, we first have to talk about the dividend aristocrats. This is a select group of 65 S&P 500
For some reason, when I hear aristocrats, I think aristocats. Does anyone else think that?
Companies who have consistently increased their dividend payouts for more than 25 years. They fit a strict criteria of growth, size, and the ability to continue increasing their payouts. And throughout the last 30 years, they found to have outperformed the S&P 500 by nearly 1% on an annual basis. In fact, over the last 2 decades, there have only ever been 2 years of negative growth, one in 2008 and another in 2018. Beyond that, dividend aristocrats have continued growing above and beyond the average. On top of that,
just because they've gone up over time doesn't mean they're going to keep going up, though. I mean, it's nice to have that track record, but just be careful.
A portion of these companies tend to outperform the market during a time of recession, and even though they could certainly decline in price alongside with everything else, they tend to decline a lot less. Not to mention, psychologically, I have to say, there is an element of receiving dividends that makes it much easier as a long-term investment strategy, because by consistently receiving scheduled payouts, you're much less likely to worry about the day-to-day fluctuations or panic sell when you see everything falling in price.
Ooh, panic selling. I think a lot of us have been guilty of that before. I try my best to not worry about it, but it's hard.
But when it comes to my own strategy and how you could use this to eventually make $100 a day, here are my own thoughts. To start, throughout the last 15 years, I've tried pretty much every strategy possible when it comes to passive income, and the first was real estate. When I was 21 years old, I purchased my first rental property, and even though I was able to make about $1,000 a month, it was a lot of work. No joke, I probably spent about a year looking at properties and making offers, another few months fixing it up, and then another month to rent it out, only to have all of it wiped away when that tenant stopped paying. Now since then, I've continued buying rental properties across Southern California, and overall I've had a really positive experience with my current cash flow coming in at about $22,000 a month.
Wow.
But not only did that take a lot of work, but I manage a few of them myself, and there are still some random things that come up that need to be accounted for. So this one is more like a part-time side hustle than an investment. In addition to that, I've long thought that YouTube would generate some passive income if I ever decided to stop posting. But I quickly realized that if you want YouTube to continue to push your content, you have to be constantly uploading. So that's a full-time job. Now everything else from affiliate marketing, online programs, self-storage facilities, and absentee-owned businesses carry a lot of risk long-term, with a low likelihood that the income will continue at the same trajectory. But my dividend investments have been the most passive income that I've possibly been able to make. And in terms of where and how I'm invested, it's rather simple. The vast majority of my money is currently split between an S&P 500 index fund.
Look at that. That's a 1.69 dividend yield. It's not very high.
Which currently pays 1.65%, and an international index fund, which is paying 3.76%. I also have a few dozen individual stocks that pay anywhere between 0.5% and 5%, ranging from Apple to Exxon to Simon Property Group, and I take the boring approach of just dollar cost averaging on a regular basis no matter what price they trade at. The goal was that the dividend should never be the primary focus of the portfolio, but it should provide a steady source of income that I could continually reinvest or redeploy as needed, and that should give my portfolio just a little bit more stability, thanks to Jerome Powell. The way I see it is that dividends could be the icing on the cake rather than being the cake itself. And over time, I've been able to build that to a $90,000 a year income that's completely hands-off and passive.
I mean, that's a full-time income for a lot of people. $93,000, most people could live off that.
So in terms of how you would be able to build your own icing on the cake passive income portfolio that generates up to $100 a day, starting from zero, here's my own advice. Now, if you just look at this from an I want to make $100 a day as fast as possible perspective, the easiest answer is really just a simple math equation. If your average dividend payment is 3%, then you'll need $1.2 million invested
Only 1.2 million.
to reach $100 a day. Now, something like this is not impossible, and by investing an average of $17 a day, you should be able to reach that amount in 35 years.
$17 a day for 35 years. Now, I can see most people investing $17 a day. Just over time, I mean, that's not so much money if you think about it, but that 30 years sounds like quite a long time.
Assuming an 8% return on your money. Bump that up to $30 a day and you could get there in 28 years, and if you're able to invest $50 a day, you'll get there in 22 years. Not to mention, if you're investing in a company that pays more than 3%, you could accomplish the exact same goal with a lot less. For example, both Walgreens and VF Corporation are dividend aristocrats who are paying a 6% dividend, and if $100 a day is your only goal, you could get there by investing $600,000, which could be accomplished by investing $30 a day for 20 years. Of course, the downside is that in the short term, both of those stocks have had a rather terrible year, but the dividend has still remained if that's your main focus. Now, I know that's not what you probably wanted to hear, and you were expecting something a lot more revolutionary that might make this happen in a much quicker amount of time, but thankfully, many of these companies do end up increasing their dividend payments over time, so the return might actually increase at a much quicker pace than expected. Although the reality is, doing this will either require a lot of time or a lot of money, and that's what I feel holds so many people back from even trying.
I think a lot of people, they start investing so late in life that they just feel like there's no time left. And like when you're really young, when you're in your 20s, you feel like, okay, you've got all the time in the world. And then you get in your 40s like I am, and you're like, okay, I need to start taking this seriously. I think most people start taking it seriously in their 40s, but then you start getting in your 50s, and then if you're in your 60s, I don't even know if there's enough time.
After all, it's not necessarily the work, because once you open up a brokerage and enable auto invest, you're pretty much done in 20 minutes. But instead, it's the impatience of staring down another 20 years and thinking to yourself, this is gonna take too long, I'd rather just day trade crypto instead. But But I will say, just like going to the gym, once you start, you're not going to want to stop. Like, I've never met anybody earning $5 a day passively who isn't thoroughly excited about the idea of getting to earn money without having to lift a finger. Every single time, once you see the momentum beginning to build, you're going to become just as obsessed as I have, and you'll do anything possible to continue to grow it because it's fun. However, just keep in mind that
it's kind of like a video game. It really is. Like watching your money grow like that. If you can just put, I mean, even just a little bit of money. I know there are people watching right now is like, I don't have any extra money. Just a little bit. Just put in a little bit extra money, $5 a day, $10 a day. I know that people can do that. I know that that's possible for a lot of people.
The VF and Walgreens examples, even solid dividend aristocrats could still be risky if the underlying stock declines in value. And sometimes it could be better just not to take the dividend and opt for stock growth instead. Although personally, I think a well-diversified portfolio should have a bit of a mix of both. On the one hand, dividends should smooth out volatility, give you consistent cash flow, and allow you more money left over to reinvest. But the rest of it should help grow your net worth, even if your portfolio looks like a roller coaster in the short term.
Okay, so what do you guys think? This whole thing about how to make $100 a day with dividends, is it doable? Do you think that you could actually be saving money like this and putting them into dividend stocks or into even a savings account? A high yield savings account right now pays about 3% as of recording this video. If you look at places, if you look online, you look for the highest paying high yield interest accounts, they exist right now. So there's a possibility to do this to make real passive income. Is this something that you can do? Have you already started doing it already? Let me know in the comments below. And please like this video. It really helps out on the YouTube channel. And also hit that subscribe button and bell notification. Thank you so much for watching. And I'll see you again in my next video. Also, if you want to check out my recent video, I'll put it right up here. And you can check that out. I just did a reaction video to a guy that's making money by doing a dumpster business. So I'll put that video right up here. Thanks for watching. I'll see you in my next video. Thanks.